Hello, welcome back to WINFXTRADING Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to your network so that YouTube pushes to a high level of audience. In today's video, I'm going to bring you part 2 of reactive signal. We have actually completed part 1 and I'm gonna throw up the video link so that you go ahead and watch part 1, but this part 2 is advanced nature of part 1. Okay, so the topic is this is the topic that we're going to be discussing. So the topic is binary H4 reactive. So in this case we are going to put plus. Okay, so this is binary H4 plus reactive IBL signals infinite plain price movement in Forex synthetic market. Okay, so this is the topic we shall be discussing this topic in this video. Okay, so the terminologies that are involved include equipotential signal failure, equipotentials signal failures. Okay, this is equipotentials signal failure, turning points orientation / sequence, influence on reactive signals, turning point orientation or sequence influence on reactive signals. Then we have Fakeout, nearest high potentials, invisible reactive signals, least IBL approach ratio. So we're going to delete this because it's repeated. Plain boundary problems, trading range, daily order plus / candlestick polarity response, control block signal continuity, EMA H4 Pull, EMA H4 Pull. Now, like, we're going to put plus on this H4 because the H4 is the benchmark for this advanced part of reactive signal. So you have to consider EMA H4 plus pull, meaning that the time frame can be H4 or higher. Okay, so this terminology are going to be used to analyze reactive IBL signals, because without them you cannot be able to actually make profit using reactive signals. Okay, so right now I'm going to give a theoretical explanation of these terminologies, and then we'll be able to go to the candlestick chart so that we'll be able to see the application of these things. Okay, so let's dive into the theoretical part. Now, you know, in the part 1 of this series we actually discuss about reactive signal in a uptrend market. So right now we shall be discussing this in a downtrend market. So we have a source there and a diagonal sink, and then a hypothetical plane in which the boundaries of this plane are parallel, the boundary of this plane are parallel. And then remember, we are using the H4 time frame plus, meaning that it can be H4 daily, weekly, monthly, or yearly time frame. And so this is a source and this is sink. Okay, now for market to react or impulse, there must be a retracement. So let's take a retracement. You see that this plane, the inclination of this plane is not all that close to 45 degrees, which is average inclination of planes, right? But we are going to use this as arbitrary. We are going to assume it actually have a typical angle of inclination to the horizontal, right? So we have remember, markets move from left to the right, LRU. So in the downtrend, we have a movement like this. Okay, now this will be like this market went up like this and then drop. Okay, as it drop, so we need to define some other, let's just define some symmetry, a symmetrical axis. And so the market went down and go up, and then it went down and go up, and then went down and go up, and then went down. Okay, and then went down. Now my point of interest is this IBL. This is an IBL. Okay, this is also another IBL. So let's make this more explanatory. We have downward and then upward, downward, upward, downward, and then upward. So this is IBL, this is IBL, input breakout level. Okay, so what is trying to tell you is that this arbitrary plane can be broken, because you can see how I'm struggling to fix the price movements inside it, but it's not actually trying to stay inside the plane. So planes in practice can be broken, and so we have the price movement moving inside this plane in this form. So this longest part is the reactive signal RA, or the impulse. Okay, while the shorter price movement, which goes against the main trend, is the retracement R. Okay, is the retracement R. And now the process continues. Remember, this is theory. And Richard, the way the market responds will not be exactly as I'm explaining it here. And so we have, this is RA, this is also RA, reactive signal, and this is R retracement. This is also another R retracement. Okay, this is another R retracement. Okay, so what this thing is trying to tell you is that when markets move, they do so in retracement and reactive signals or impulsive signal. Okay, meaning that we can now define a trading range using this idea. So that is a trading range between one IBL and another IBL. So this is IBL1 and this is IBL2. Okay, this is IBL2 and this is IBL1. Okay, and so the market trade between these levels, okay, and breakout. The main aim of this video is actually to help you make advantage of these reactive signals, because they are the only signals that follow the trend and the only signal that can pay you. But the only thing is that the accuracy of such signal, like the fact that you don't know when a retracement will end, you cannot say it with 100% certainty that the retracement is going to end at so price, and then it will be hard to actually know when a reactive signal starts. But in this video, the general rule of thumb is that whenever the market retraces towards the IBL, there are probabilities of generating reactive signal. Okay, so long the source of the retracement creating the source of the retracement that will create this reactive signal is used in the stop loss placement. Okay, in doing so, the risk reward of such signal is going to be is going to fall to the 1:1 or go negative, meaning that you can actually make profit, but you have to risk more to get a fraction of what you risk and not a multiple of what you risk. So you might be risking $100 just to get $25. So if you now consider it in a long term, you are actually making consistent profit, but then the risk reward is very low. But for the fact that no strategy is 100% due to a lot of fluctuation in the market seasons, and market have different energy state and all of that, and volume spread conditions, you might lose. Like, it's very risky. You might lose big amount, because each time you make a trade, you just get a fraction or maybe 100%, fraction to 100% of what you risk. Okay, so when you risk so much, or when you make some series of profit and then you want to go further and risk, and then you lose all the profit you have made because your risk reward is negative, is almost negative or just 1:1, and you see that this idea become more complicated. Okay, so the general thing here is, if you can localize your first take profit, once that first take profit hit, and this first take profit actually is within the trading range. Okay, what I'm trying to say here is, if you are taking a sell when this retracement pulls back like this, you are going to take your profit here on this IBL, this triggerable IBL. You take your profit, and then maybe you take 50% of your profit, like you close 50% of your positions and trade your SL to your entry here, so that even if the market want to pull back, you are going to end up losing nothing. You are going to end up in a break-even. And the truth, in 80 to 90% of the time, the market is even more than that. 90 to 95% of the time, the market will just pull back a little bit and break levels and create more IBLs, and then your risk reward with this stop loss trading, your risk reward can now increase to more than 1:2 and then to infinity. That is risk reward optimization using stop loss trading. And you see, this thing doesn't just work because you are just trading with it alone. For this thing to work, you must have understood the structure of the market. You must have understood the underlying price action. Fundamental analysis for forex market is needed. Politics, news, and all of that. You have to be acquainted with this. Even sentiment, you have to be acquainted with this. But for synthetic market, you don't need fundamentals, and so what you need is technical. So you need to deploy other higher level technical methods for this thing to work. Because if you are taking reactive signal where the trend is going to change, it's not going to work. You are going to lose your money. Whatever you risk, you are going to lose it all. Okay, so right now we'll be going to chat and be seeing some of these things happen in life. Okay, at this point, if you feel like this thing is very, very complicated, or you are being, debating on it and it's a kind of, it's confusing concept, all you need to do is to be proactive and make sure you leverage the effort of the winners. And that's why WINFX trading exists. You have to leverage the effort of successful traders. Copy and paste our trade in real time. You have to be a subscriber in our VIP channels, enroll for our courses and mentorships, courses short-term, mentorship long-term, and then see yourself hit your target. You can't be everything in life. You can only master one thing, and there are 80 billion, there are more than 8 billion people in the universe. So there are division of labor where you can suffer and suffer and suffer till you leave this planet is if you don't have a way to contribute to what the mass population needs or to what the masses need. Okay, and what it is you know that you have some capital to invest in the financial market just to make profit for you, like to grow your wealth, right? To appreciate your wealth. You have it. You have another business that is source of your income. Even when you sign up with a broker, they want to know your source of income, right? So you have a business that is your source of income. So that business that has, if you have to assume there is no trading, since investment should be a kind of a secondary source of income, right? Not really dependent, because market is full of probabilities and chaotic events. But WINFX trading is here to optimize everything for you, right? So what you need now is ask yourself, what is your concentration? What is your specialty? Where do you base? What do you base on? Like, what do you focus on? What do you focus on before you come to have idea of investment? Because for you to invest, you must have a source where the investment capital will come from. Now, that source, whatever that make you to create that source, is your specialty, is your concentration, is your endeavor. That is what you are good at. And what I'm trying to say here is you can only do one thing, that you can only succeed if you put all you have in one thing. You can do it very well. Okay, now we have sacrificed our energy, our time, everything, our ego. Most time we are sleepless for years, like sleepless nights, just to understand the market, right? So when we have done all this and you are still losing money, it means you just want to be a failure. You can't be a pilot and at the same time become a medical doctor, or at the same time become a politician. It's not possible. You must leverage the effort of successful people for you to achieve those things you cannot achieve naturally on your own. So what I'm trying to say here is you have to subscribe to our VIP signals, enroll for our courses or mentorship. Yes, it's very costly. If you want to be on a first class to Dubai, on a first class jet, on a first class flight to London or any other country, further from your country, it's going to cost you more than you will pay in economy or business class. And so the reason is because the value you are getting is priceless, a kind of diamond driven or gold driven. Now what it is we put a lot of energy, we put a lot of painstaking effort, and we put you into consideration while we are making the analysis and while we are looking deeply into the market to figure out what you cannot naturally figure out on your own. The energy is infinite, the energy is massive, and after doing this we come out with the best results that has been proven to have an infinite statistical age and a consistent, it have high consistencies in profit making. And so what you need to do right now, whatever it takes you, whether it involves to borrow money, do it, have access to our VIP and say no to losses again. Okay, have access to our courses and say no to losses. It's going to be costly, it's going to pain you when you actually subscribe because you are going to spend a lot of money. But once you do that, count yourself as one of the future millionaires in real time. Okay, all right, now a few words is enough for your wise. I will be stepping up to the MT5 so that we go to the main thing while we are here. So that's cool. Okay, right now this is a Forex asset, 𝑧/USD, good United States dollar. I want to get a downtrending market in the H4. So this is H4. So let's start defining our IBLs. There is IBL here. So in finding this IBL, we reduce the thickness. So we just know the final level where the price breakout. So what do you notice? As price action approaches this IBL, what's happened? A reactive signal occur. A reactive signal occur. As simple as that. Okay, but one thing you're supposed to know is that there is no formula, there is no scientific method of knowing the exact place where the reactive signal will start or the source of that reactive signal, right? But what we know is as the retracement approaches the IBL, the success probability of generating reactive signal approaches 1. Okay, and probability of 1 is 100% certainty that this thing must happen, right? So that's what we mean. So look at what happened. 𝑧/USD do what? Crash from there all the way to the previous low. It crashed all the way to the previous low. So the problem now is if you are taking a trade near this IBL, where you are going to put your SL is an issue. So that's where you need to define territories. Define reactive signals before after the IBL. localize their midpoint, localize their boundaries, you can step down to lower time frame while you do this thing, and then from there you can optimize your SL for better risk reward. So when you know that market cannot interfere in the territory of previous reactive signal before the IBL, okay, you notice that if you can localize zero differentials, which are resistances and support, but basically the differential, the zero differential you are looking for depends, it actually depends on the direction. So when you are looking for sell, you are looking for resistance. If you are looking for buy, you are looking for support. So there is a resistance here. So when you enter this market near here, you can put your SL above this resistance. That's cool. Okay, so this is a resistance. So you enter this market somewhere here, and you are putting your SL there. No matter how it's strong, it cannot hit your SL. That's the power of reactive signals. And what happened? The market went down by 700 pips, while you risk only 140, or let's say 100 pips. That's the risk. That's the risk reward of 1:7, and that's crazy. Okay, yes, the risk reward is very, very big, which is contradicting what I said in the previous sim of this video. Yeah, the reason why for such increment is because of optimization that was carried out on the SL. But if you follow it from the fundamental point of view, you are entering this market and you are localizing the previous high, because you know that the market cannot go against the previous high, and then you are putting your SL on the previous high, and you want this market to go back to the previous low as a reactive signal. When you do that, when you do this, what do you expect to happen? The market will go to that low, and then you see that the risk reward is because you're actually risking around 63, and here we are getting around 62. So the risk reward is close to 1:1, as I said, if you follow this from fundamental point of view. But when you optimize your risk reward, it tends to be infinity, right? I'm going to continue this with other time frame. Let me have a break. I'll come back. Okay, this is daily time frame. Okay, this is daily time frame. This is daily time frame. We are looking for a downtrend in the ZAR-USD, because we have talked about uptrend. It seems that gold doesn't have a downtrend in the daily time frame. It's just uptrend, uptrend, uptrend. Okay, for that, I'm going to use this uptrend example. So we have an IBL here. There is an IBL here in the daily time frame. This is IBL. Okay, now there are a lot of terminologies I use in the document in the part 1 of this series of this creative signal analysis, and maybe I might have also used it in this part 2, which is advanced, or maybe I just drop it hoping that you know about it. These are the input output length, the input output length ratio 1:1, plus the, yeah, so that ratio is very important. So when a breakout happens, the length of that breakout matters in some, like it matters in most cases. So you see there is a breakout, but when the market starts retracing, it actually go back into the territory of the previous reactive signal. This is not what you want. This is not what you want. So for you to be safe, for you to get the truth about this, consider IBL that are in parts, like that are measuring price data, which are close to the line of best fit, to like very close to the vicinity of price movement. So taking this IBL is better than taking an IBL that measure price event, you know, in a very far time ago. Okay, so you see for sure there is a break of structure here. This is a valid, this type of IBL is actually going to give you short signals for sure, right? So there is a breakout and the market pulls back. Okay, the market retraces towards the IBL. Okay, though if you shake based on the input output length from here within the lower boundary of this IBL, you can measure we have about 34 pips and a source that creates signal that touches this IBL is also 29. So if you check the risk reward of the inputs, which is the signal from the source to the output, is actually giving us 1:1 plus. That is a sign of a good breakout, right? Now after this, the market pulls back. What do? You enter this market. Okay, your first take profit will be here because that is the previous high. You buy, your first take profit will be here. Then once your first take profit is hit, you try your SL to your entry so that you hold this trade until it make as much IBL as possible, you know, because we have another IBL here and then it keep pushing. Okay, now what do you notice? There is IBL here, but what happened when price dropped? It failed to create a reactive signal. So how do you explain what happened here? Okay, so for you to explain what happened here, that is why you should, you know, these things are real, these things are, but we know how to know when they are real. So I'm not going to show it in this video. You know, the video is even getting longer, but the truth is I know why it happened, but I'm not going to say it. I know why it happened, so I know when it is going to be a failure and I know when it is going to be a success, right? So you have to subscribe to our VIP for you to get what you want in this trading of a thing. But let me just give you a small insight. When you actually if you come here and draw this, what do you notice? Price have to come and touch this trend line. That's all. Okay, so if you map it clearly, there are probabilities that price have to come and touch this trend line and right, and that's why that's one of the reasons. This is not the only reason. There are other reasons, but that's one of the reasons why this reactive signal didn't occur here, right? Let us shake crash market. Let us check crash 300. Let's check crash 300 market. So right now this is crash 300 in the daily time frame. Okay, this is crash 300 in the daily time frame. So we have this IBL. That is IBL here. The market breakout, and then it start approaching this IBL. As it is approaching this IBL, it creates a reactive signal, which is this, and the market went up. Now the issue of trading range, I said trading range, right? When you localize your IBL, also try to localize another IBL in opposite direction. We know here there is also an IBL here. So because you have localized this IBL, once you buy here, you are going to take your profit here. knowing the trading range will help you to know where you should take your profit so that your profit will not turn into losses, right? So these are based on first order reactions, because if you are trying to trade other ones, they do fail, though they might happen with liquidity sweep. Like here, you see, it have to break out and then become a fake out, and the market went up. The same thing happened here, okay? But the first one is what you should be interested in. Now look at here, there is IBL here in the daily time frame. Immediately market come, tap into the IBL, it start going up. Now when you want to enter this market in a higher time frame like daily, it will cost you a lot of money to actually succeed. The reason is because, take for instance, you are entering this trade here. You are going to spend more money because you are in a higher time frame, right? So you are entering this trade here, okay? So what you need is territory of previous reactive signal. So the previous reactive signal was here. This is a territory. Then you can step down to some lower time frame like 4 hours, like the next lower time frame, like the nearest lower time frame, okay? When you enter here, you already know your entry. Say you are entering this market, so that is optimization. I'm trying to do optimization. Say you are entering this market, okay? The reason why I want to do this optimization is the cost of entering this trade will reduce, right? So if you are entering this market at this price, 46.1 point something, you want to put your SL. Remember, you have to define your territory very well, okay? So this is our territory, separated from the IBL, and we step to 4 hour, which we are, okay? So we actually enter this market here, okay? We enter this market here, so you want to put your SL here. The reason why you are buying, so you are looking for a support. So this is a support here, from the left to right, here. You put your SL here, and then basically you enter here, and you are risking 350 pips, and you are cashing 900 pips, about 900 pips, because you want to take your profit on the previous high, because the market is progressively going up, right? I'll be ending this video here. You see, it works in Forex, it works in synthetic, it can also work in stock market, okay? I have one stock market. Let's see this thing in stock market. Right now this is NVIDIA Corporation, so it's a kind of stock market. So this NVIDIA is in daily time frame, okay? And so we have this IBL here, and what happened? Immediately price tap into this IBL, the market do what? Create a reactive signal. Yes, there are liquidity sweep that happen, but I don't care about that liquidity sweep. I will tell you why. So the market push high and go forward, right? So when you localize your opposing IBL, because you're supposed to know that is opposing IBL here, that is break of structure there, so that's where your TP is supposed to be. Now when you define your territory, previous reactive territory, and you step down to the nearest lower time frame ever, you can actually localize their support. So this nearest support, so one of the nearest support is this, but what happened? It was taken out, right, by the liquidity sweep. But that's why we have a midpoint theory. The midpoint of a territory it is very hard for price to react to a midpoint of a territory. So here should have been, because a stock can fluctuate more than you think, you know. It can fluctuate much more in a different way than Forex fluctuate. All of them fluctuate, but that could be gap, and all this gap can go against you. Right now, you see it try to reach this midpoint. It couldn't. So you can deploy midpoint theory when you are dealing with stock to make this thing work, right? So that's cool. I'll be ending this video. Make sure you keep subscribing and make sure you be proactive with us for you to go far. Bye for now.